Welcome to Daily Crypto, episode 10. We've got a lot to unpack today as we dive into what's moving and shaking the crypto world right now. You've shared a ton, and we've really tried to distill it down to the insights that, really matter for you. Our goal here is to give you a clear understanding of the current cryptocurrency landscape and, well, what these developments might actually mean.
Yeah, definitely a lot happening. And I think what immediately jumps out is just where the major players are sitting price-wise. Bitcoin is holding pretty strong at, let's see, $84,868. Then you've got Ethereum at $575.32. BNB is at $591.85. Solana around $133.22. And XRP at $2.15. So these figures, they give us that crucial starting point, right, to see the recent shifts.
Exactly. And those shifts, they are definitely telling a story. We've seen some coins gaining ground recently. Ethereum, BNB, Solana, even Shiba Inu and Pepe are in the green. But it's not like a uniform picture, is it? XRP, Bonk, Dog of Hat, and Popcat have actually seen some losses. What's your take on this kind of mixed bag?
Well, that sort of divergence, it often points to a market that's reacting to specific news, or developments around individual projects rather than just one big sweeping trend. The gains in some areas might reflect positive sentiment, maybe specific catalysts, while the losses could indicate some profit taking or perhaps negative news hitting those particular coins. It suggests a market that's actively evaluating individual opportunities and risks.
Right, active evaluation. And speaking of active markets, the first quarter of 2025 saw this massive surge in spot trading volume on Bitget. It hit $2.08 trillion. That's a 159% increase. I mean, that's a huge jump. What does that kind of activity on a spot exchange really tell us about the market's underlying appetite?
Yeah, a surge of that magnitude, especially in spot trading, not just derivatives, it could signal a really significant increase in genuine interest in actually acquiring the underlying crypto assets. It might indicate a shift away from purely speculative plays towards more, let's say, fundamental accumulation. And if that buying pressure keeps up, it could lay a more stable foundation for potential upward price moves.
Okay, stable foundation. Now, here's something really interesting that CryptoQuant highlighted. The gap between the perpetual and spot prices for Bitcoin. It's narrowing. Now, for folks who might not track this metric daily, why is a tightening of that gap potentially, a signal for a Bitcoin rally?
That's a great point. So the perpetual futures market, it often carries a premium or discount compared to the actual spot price, right? Yeah. Reflects trader sentiment, leverage, that sort of thing. When this gap narrows, particularly if the premium on perpetuals decreases, it can suggest that some of that excessive speculative leverage is being flushed out, reduced. This often implies that any price increases that follow are more likely driven by real buying interest, actual demand, rather than just over-leveraged positions, which, as we know, can lead to sudden liquidations and downturns.
Okay, so less froth, potentially more substance. That makes sense. So we're seeing this interesting market activity. Let's dig into some of the news and events that could be fueling these dynamics. First up, the United States SEC's timely stablecoin guidelines. Even without all the specifics right in front of us, what kind of impact do you generally see from regulatory developments like these?
Right. Even without knowing every detail yet, the fact that the SEC is issuing timely guidelines for stablecoins is significant in itself. These guidelines usually tackle crucial things like reserve requirements, transparency stuff that's vital for maintaining trust and, frankly, stability in the stablecoin world. And given how important stablecoins are for trading, for liquidity across the crypto space, well, clear rules are generally seen as a positive step. Helps the market mature, reduces systemic risks.
Okay, positive steps, hopefully. Now, switching continents. On the global regulatory front, Abu Dhabi's financial regulator, they came down hard on a crypto firm and its CEO, operating without a license, and hit them with a fine over $12 million. That's a pretty strong message, wouldn't you say? What does this tell us about how regulators worldwide are approaching crypto?
Oh, absolutely. That action, it really underscores the increasing global focus on making sure crypto firms play within the established legal boundaries. Authorities are definitely becoming more proactive, enforcing licensing, holding firms accountable. A fine that size serves as a clear deterrent, no doubt, and reflects a broader international push for more oversight, more accountability in the industry.
Accountability is key. Now, let's look at how big investments can really move the needle for specific coins. World Liberty Financial Inc., WLFI they're called, apparently made a pretty substantial purchase of, say, SEI, like $775,000 worth, and this reportedly triggered a 20% price jump before it hit some resistance. What's the key takeaway here about the impact of these larger players on maybe smaller altcoins?
Yeah, this really illustrates how significant capital injections can create substantial price movements, especially for altcoins with relatively lower market caps.
Yeah.
A purchase close to $1 million for a coin like Say, that can be a big chunk of its daily trading volume. So you see that rapid price appreciation. But the fact that it stalled at resistance, that highlights the constant tug of war,
Yeah.
between buying pressure and existing sell orders or profit-taking levels. It's always there.
Right, that push and pull. Okay, moving to something trying to bridge crypto and traditional finance, Paycoin. They're apparently launching a crypto-backed MasterCard on April 30th. How do you see a product like this potentially increasing the real-world utility of crypto for everyday folks?
Oh, that's potentially huge. A crypto-backed MasterCard. It essentially lets people spend their crypto holdings anywhere MasterCard is accepted, which is, well, almost everywhere. This dramatically enhances the practical use of crypto, right? Makes it easier to use digital assets for everyday buys. It really bridges that gap between the digital and physical economies. It lowers the barrier for crypto adoption, too, by
Yeah.
using a payment method people already know and trust.
Easier adoption, yeah, that makes sense. But unfortunately, we also have to talk about the risks. Odin.Fun apparently experienced a security breach, had to suspend trading, and this led to a crash in their meme coins. It's a stark reminder, isn't it, of the vulnerabilities out there, especially with newer platforms. What's the critical lesson here for people listening?
Absolutely. It's a tough reminder, but yeah, this incident just underscores how vital security is in crypto. It's paramount.
Yeah.
Newer platforms, and especially those dealing with really volatile assets like meme coins, they can be particularly tempting targets for bad actors. So, the lesson, you've got to be extremely cautious. Choose where you store your assets carefully. Research the security measures of any platform you use thoroughly, because a breach can have severe, severe financial consequences.
Exercise extreme caution. Got it. On a more positive note, perhaps, Metaplanet. They're continuing their strategy of accumulating Bitcoin. They're apparently nearing a total of 5,000 BTC now. That's a significant commitment. What could be driving this consistent accumulation?
Yeah, Metaplanet's steady buying, it really suggests a strong long-term belief in Bitcoin, either as a store of value or maybe as a strategic asset on their balance sheet. This kind of consistent buying could be driven by worries about inflation, maybe just a conviction in Bitcoin's long-term appreciation potential, or perhaps a desire to diversify into alternative assets. Getting close to 5,000 BTC, that shows a really significant and sustained belief in a Bitcoin's future.
Sustained belief. Okay. However, the bigger economic picture can sometimes cast a shadow, can't it? We're seeing reports of a surge in outflows from Bitcoin ETFs, and this is being linked to concerns around the U.S.-China trade war. How do these kinds of global macroeconomic tensions typically ripple through the crypto markets?
Right. Geopolitical stuff, macroeconomic uncertainties like worries about a trade war between major economies like the U.S. and China. They can inject a lot of volatility and risk aversion into global financial markets, and that often spills over into crypto. Investors might react by reducing exposure to assets they see as riskier, and even regulated things like Bitcoin ETFs can see outflows as part of this broader de-risking trend. It's all connected.
It's connected, yeah. Okay, turning back to specific tokens, the Trump meme coin. It's reportedly facing pressure because there's a big unlock coming up, like $320 million worth of tokens hitting the market this week. For people following meme coins, why can a large token unlock lead to downward price pressure like that?
Okay, so a large token unlock, it basically just increases the available supply of that crypto on the market. Simple supply and demand, really. If the demand to buy these newly released tokens isn't strong enough to soak up that extra supply, well, it can lead to selling pressure and a price decline. Plus, the people getting the unlocked tokens, especially if they got them cheap earlier, they might be tempted to sell and lock in profits, adding even more downward pressure.
More supply, potential selling, makes sense. We also saw a really dramatic event with the OM token, reportedly crashed by 90%. The CEO of Mantra, the project behind it, blamed forced liquidations on exchanges. What does this highlight for you about the inherent risks of volatility and, well, using leverage in crypto?
Oof, yeah. A 90% crash due to forced liquidations. That's a really stark, painful reminder of just how extreme the volatility in crypto can be. And it highlights the amplified risks of using leverage, of trading with borrowed funds. When traders use leverage, even relatively small price moves against them can trigger margin calls, then force liquidations by exchanges trying to protect themselves. And in a highly volatile asset, like OM apparently was, these liquidations can cascade, one triggering another, leading to those rapid, severe price drops. It's brutal.
Brutal is right. Now, shifting to the, let's say, more speculative end of the spectrum, there's a lot of buzz around a new crypto called Lightchain AI. Some are making really bold predictions about its potential growth, comparing it even to established meme coins like Shiba Inu. What's your perspective on the hype around these brand new altcoins?
Ah, yes. The crypto space is always churning out new projects, right? Often with tons of hype and really ambitious promises. And while it's always interesting to see innovation, it's absolutely crucial for listeners to approach these new altcoins with a, let's say, healthy dose of skepticism. Predictions of exponential growth, especially comparing them to established players. View those very cautiously. New coins often have very limited track records. They're subject to extreme volatility driven mostly by speculation and, social media sentiment. Buyer beware, always.
Healthy skepticism, definitely needed. And it seems like market attention can be quite fickle, too. We're seeing reports that Dogecoin and Cardano are facing some struggles price-wise, while this Lightchain AI is apparently gaining traction. What factors might explain these kinds of shifts in market sentiment towards different altcoins?
Yeah, market sentiment in the altcoin space. It's often driven by this really complex mix of things. New narratives, tech developments, community buzz, broader market trends, it all plays a role. So if a new project like Lightchain AI manages to generate significant excitement around its tech or potential use cases, it can definitely attract investor attention and capital. And that can lead to a shift in focus away from older or maybe less hyped coins at the moment, like Dogecoin and Cardano. Sometimes, regardless of their underlying fundamentals or established communities, it's about where the buzz is.
Where the buzz is, and the lure of the potentially massive returns, that remains a really strong force, doesn't it? We're seeing reports of a 10% rally in both SHIB and DOGE, alongside some new coin that's apparently eyeing a 10,000% ROI. This just underscores the highly speculative nature of a big chunk of the crypto market.
Absolutely. That potential for extremely high returns, it's a major draw, let's be honest. And while theoretically it's possible for some very, very early stage projects to see explosive growth, the vast majority of those astronomical ROI predictions, they just don't happen. And these types of investments carry a very, very high risk of substantial or even total loss. Seeing established meme coins move alongside the hype for a new high potential coin, it just highlights the diverse risk appetites out there.
Diverse appetites, for sure. Now, looking at how traditional political and economic viewpoints can intersect with crypto, XY miners are suggesting that former President Trump's economic policies could potentially lead to Bitcoin hitting $250,000. How do you see political events and stated economic policies getting interpreted within the crypto context?
Well, interpretations of how politics and economics might affect crypto, they can vary wildly, right? Often depends on who you ask, their own economic theories. In this case, XY miners are suggesting a link between specific Trump policies and a huge Bitcoin price jump. Maybe based on expectations around inflation, fiscal policy, or just broader market mood. But it's really important to remember these are speculative interpretations, the actual impact of political and economic events on crypto prices. It's complex, often unpredictable.
Speculative interpretations, right? Okay, shifting slightly. On the exchange front, BingX is celebrating its 7th anniversary with a campaign. These milestones often mean like special offers and activities for users.
That's right. Anniversaries, they're key moments for exchanges. Good chance to engage their existing users, maybe attract some new ones, and just reinforce their brand with promotions and community stuff. Standard playbook, but effective.
Okay. Now, in DeFi, there's some talk about how Uniswap's 2025 outlook might be affected by CartelFi's successful fundraising. They reportedly raised $600,000 in just 3 days. How might the emergence and, well, success of a new project like that potentially influence a major player like Uniswap?
That's interesting. The rapid fundraising success of a new DeFi project like CartelFi, it could signal emerging trends or maybe areas of strong interest within DeFi right now. This kind of activity can hint at future competition, or maybe areas where established platforms like Uniswap might need to, adapt or innovate to keep their edge, keep attracting users and liquidity. Shows how dynamic and competitive DeFi really is.
Dynamic and competitive, yeah. On the event side, Italy's biggest crypto event, Blockchain Week Rome, is gearing up for its 6th edition. These industry gatherings, they're pretty important for fostering connections, right?
Absolutely crucial. Events like Blockchain Week Rome, they offer invaluable chances for industry pros, developers, investors, enthusiasts to network, share the latest insights, promote collaboration. Really vital for the ecosystem's health.
Okay. And even crypto CEOs are getting creative on social media. The CEO of Tether apparently used a Simpsons meme to highlight Tether's 13% growth in Q1. It's kind of fascinating how internet culture bleeds into even these more traditional financial discussions.
Yeah, it's a great example of how crypto embraces internet culture for communication. For Tether, issuer of USDT, the biggest stablecoin, highlighting 13% growth with a recognizable meme. It's an effective way to engage a broad audience and just underscore the continued strong demand for their stablecoin. Smart, really.
Smart, maybe. But with that increased usage, we also see the darker side. There are reports of a big fraud ring in China laundering over $6 million in USDT, apparently stolen from victims in India. This just highlights the ongoing challenge of fighting financial crime in the digital asset space.
Yeah, that's a very serious concern, and it highlights the persistent need for, well, robust security, better user education, and definitely international cooperation to combat fraud and money laundering involving crypto. The scale of that reported operation is a stark reminder of the risks and, yeah, the importance of vigilance.
Vigilance is key. We also noted earlier WLFI, World Liberty Financial Inc., involved with that Say purchase. Turns out they've also quietly launched their own stablecoin, USD1. Seems like they're making moves across different crypto segments.
Interesting. The quiet launch of a new stablecoin, especially by a company also actively investing elsewhere in crypto, it's just a potentially broader strategy, maybe aiming to become a significant player. The quiet launch can be a testing phase or just a deliberate way to enter the market without too much fanfare initially. Be interesting to see how USD1 fares against the established players.
Yeah, one to watch. The intersection of crypto and traditional law keeps popping up too. A CryptoPunks trader has reportedly pleaded guilty to, wow, $13 million in NFT tax fraud. Serves as a pretty clear reminder that tax obligations apply to digital assets just like anything else.
Absolutely. That case sets an important precedent. It reinforces that profits from NFT trading are taxable, no question. The guilty plea shows that tax authorities are definitely increasing scrutiny on crypto and NFT transactions, and the consequences for not complying. They can be significant legally and financially.
Definitely something to keep in mind. Looking at the development side, reports suggest a big drop, like 71% in investor funding for Web3 games. This might suggest, what, a shift in investor sentiment, or maybe a reevaluation of that sector's potential.
Yeah, a drop that steep in Web3 gaming investment could be due to a few things. Maybe broader macro conditions hitting venture capital, maybe a rethink of how viable current Web3 gaming models are,
Yeah.
or potentially just investors shifting interest to other hot areas in crypto and blockchain. It suggests the initial hype around Web3 gaming might be facing some headwinds, needs more development perhaps to regain that investment momentum.
Headwinds, okay. And finally, we have just a few more quick updates to touch on. Binance and OKX have both responded to that big OM token price drop, likely addressing user concerns, explaining the liquidations. The custodian for the stablecoin FDUSD released an attestation report claiming 1.1 backing, despite those ongoing fraud allegations involving Justin Sun. And, on a concerning note, reports of crypto malware silently stealing ETH, XRP, and SOL from wallets just highlights that ever-present need for security vigilance.
Yeah, these rapid-fire updates really show the constant flow, don't they? It's nonstop. Important for exchanges like Binance and OPX to address major market events, maintain user trust. Attestation reports are absolutely crucial for stablecoins to keep credibility, especially when facing any kind of allegations. Needs that transparency. And yeah, the malware threat, it just underscores the absolute necessity for everyone listening to practice strong security habits. Protect your digital assets. It's non-negotiable.
Absolutely non-negotiable. Wow, okay. We've covered a lot in this deep dive, haven't we? From price moves of major coins, that huge trading activity, regulatory news, project developments, and those really important security concerns. Hopefully this has given you all a clearer picture of the dynamics currently at play in the crypto space. Just remember, the crypto market is constantly evolving, and staying informed from multiple angles is absolutely key. Join Daily Crypto for real-time market updates.